Two companies now control more money than the GDP of almost every nation on Earth. And if you have a 401k, an index fund, or even a basic retirement account, you're helping them do it. Most Americans don't realize this. Every time they save for the future, a tiny piece of power shifts away from democracy and into the hands of two financial giants, BlackRock and Vanguard. Companies so influential, so embedded, that in many parts of the US economy, they function less like asset managers and more like infrastructure behind the entire system. People talk about elections as if they're steering the country. They talk about Congress, presidents, political debates, but follow the money. And something becomes obvious. Real leverage in America doesn't sit in Washington. It sits where capital pools, where markets move, where corporations take direction. And the most concentrated form of that leverage rests with firms you never voted for, never debated, and barely notice on your statements. Let me ask you something. If a company manages your retirement, your pension, your index funds, and your economic future, should it end up with more indirect power over your life than the people you elect? To see how this happened, you have to go back to the 1970s. Inflation was squeezing the US economy. Investing was an insiders-only game. Then John Bogle introduced something that seemed boring: the index fund. A fund that didn't try to pick winners. It simply bought the entire market. No genius, just scale. This became the foundation of Vanguard. Slow-growing, low-fee, almost invisible, but quietly accumulating power. Every dollar invested in these funds became a permanent slice of corporate America. Index funds don't trade in and out. They hold forever. So those shares, they didn't move. They piled up. Then came 1988. Larry Fink created BlackRock, not a traditional asset manager, but a company built around risk, data, and control. BlackRock's advantage wasn't personality or showmanship. It was engineering, building a system so advanced, so necessary, that a growing share of the global financial world would eventually struggle to operate without it. By the early 90s, both companies were managing billions, pension funds, corporate savings, retirement plans, but something bigger was shifting. Because when you buy an index fund, you don't vote the shares. The manager does. And the manager is almost always BlackRock or Vanguard. You own the shares, but they control the vote. You contribute the money, but they influence the companies. No elections, no campaigns, no debates. Just trillions quietly consolidating in two hands. Here's a question. What's more powerful? Political authority, or the ability to influence every major corporation at the same time? Then 2008 hits, the financial crisis. And suddenly, we learn who understands the system and who merely governs it. When the system collapsed, the US government didn't turn to its own experts. It turned to BlackRock. Why? Because BlackRock had Aladdin, a risk engine tracking more than $20 trillion worldwide. That visibility changed everything. BlackRock wasn't just in the system anymore. In many ways, it functioned as the system. Meanwhile, Vanguard kept growing. Americans poured money into index funds. Cheap, simple, stable. And those trillions made Vanguard one of the largest shareholders in company after company. By some estimates, BlackRock, Vanguard, and State Street are the top 3 shareholders in around 90% of S&P 500 companies. Apple, Amazon, Google, Microsoft, Meta, JP Morgan, Exxon, Coca-Cola, Walmart. At this scale, they don't need majority control. They have something stronger: permanent, consistent, concentrated influence. When a CEO knows a single asset manager represents trillions across thousands of companies, that CEO listens. Think about it. If the same 2 or 3 shareholders influence every boardroom, is that competition or coordinated ownership? Now, the real-world impact: housing. Over the last decade, institutional investors moved aggressively into residential real estate. In some cities, they went from owning 1 in 10 homes to nearly 1 in 4. Families looking for a starter home are suddenly competing with billion-dollar vehicles. Homes get bought in bulk, not to live in, but to rent out. Prices rise, supply tightens, and a growing share of a generation gets pushed into long-term economic tenancy. This isn't conspiracy, it's scale. When trillions enter a market, that market bends. Now add political access. Executives from these firms move into the Treasury, advise the Federal Reserve, join administrations. The revolving door isn't unusual. But here, the stakes are different, because the financial ecosystem depends so heavily on their systems that even serious attempts to rein them in could shake the same economy millions depend on. So now, you don't just have financial power, you have regulatory power, informational power, political proximity, all looping through the same institutions. Then comes 2020, the pandemic, markets freeze, and once again, the government turns to BlackRock to help execute emergency bond buying programs, not to pick winners and losers, but to operate the mechanics that influence which companies get stabilized and which get left exposed. Here's the unsettling question. If a private company becomes the operational arm behind emergency policymaking, where does public authority end and private influence begin? Today, BlackRock manages more than $10 trillion. Vanguard manages more than $8 trillion. Combined, that's more financial power than almost any nation on Earth. Their influence grows with every paycheck that flows into passive funds, and the system grows more dependent. But dependence has risk. Passive investing creates uniformity. Everyone owns the same companies. Everyone holds the same positions. Markets start to move as one. In normal times, that looks stable. In extreme conditions, it becomes a fault line. If one giant falters, the cascade could be intense. Not certain, but possible. And that possibility alone changes how regulators treat them. They're no longer ordinary institutions. They're too significant to regulate like everyone else. And that's the part people miss when they see BlackRock or Vanguard on their statement. Because the real story isn't villainy, it's consolidation, convenience, scale, the natural gravity of trillions flowing into the same places year after year, until those places become structural pillars of the entire economy. So, what do you call an institution that manages your retirement, influences your corporations, executes government policy, shapes entire asset classes, and anchors global markets? A company, a regulator, a partner, or something that sits in the gray zone between public and private power? This empire didn't need violence. It didn't need propaganda. It only needed your retirement plan and your trust in a system built on convenience. The most powerful empire in modern American history wasn't built by politicians. It was built by passive investment, by trillions concentrating quietly into the hands of two firms that never needed your vote to reshape your economy. BlackRock, Vanguard. Not the government you see, but the shadow influence behind the one you elect. If you want more videos breaking down how money and power really work, subscribe so you don't miss what's coming next.